The best ideas don't simply disrupt markets, they expand them. Today, we stand upon the precipice of new technological advancements that will rock our society to its core. What's really exciting is that we can see some of the greatest technological advancements in human history being slowly adopted. Of particular interest to me is the evolution of the digital economy. To that end, let's talk about some of the projects that I'm following right now and why they've got me excited. Welcome to Ready Set Crypto. This is your brain on blockchain. So as I've been talking about recently, we've made some major upgrades and changes to our website and service offering. We've bundled everything together, our classes, our newsletter, and our private community, into one package we call Omnia. We're really excited to bring this to market because we feel it's the gold standard in terms of service to value. So I'd love to see you come aboard and join one of the best communities in crypto. One of the central tenets we're building into Omnia and our education model is the concept of the digital economy, supported by three pillars of crypto, security tokens, and decentralized finance, or DeFi. To that end, I'm going to break up the 10 projects that I'm going to cover in this video loosely into those three pillars. Starting off, we're going to cover crypto, which is probably what you're most familiar with, and it's loosely defined as anything using a blockchain to advance the means and methods of our baseline economy. The first crypto project I want to cover is Binance Coin, or BNB. It's continued to do well following the launch of its new decentralized exchange. In order to hasten adoption, CZ recently announced that users will have the opportunity to earn BNB tokens for test driving the new platform. Anyone who holds at least one BNB on their Binance account will be eligible to participate in this Binance DEX simulated trading competition. The competition will begin on March 7th and run through March 21st, with around $100 up for grabs per address. So what does that have to do with why I'm watching this project? Well, it's easy to observe that Binance is one of the largest crypto exchanges in the world, and that puts them in the spotlight, especially as it relates to how they'll grow the overall market ecosystem. What CZ has said, and what I agree with, is the fact that crypto exchanges are already setting up the ecosystem of the future. Sure, there's short-term challenges that relate to security and functionality and usability, not to mention user adoption, but I think those are all surmountable challenges that, given the proper motivation and work, we will see exchanges and the overall ecosystem overcome them. So essentially, I think Binance is in the best position to push the overall ecosystem forward and maintain relevance in a time of transition. So in the short term, I continue to expect Binance to do very well, and we should hope that their decentralized exchange finds adoption, usage, and the sort of functionality that we're hoping for. So the next project I want to cover is DGTX Futures, a zero-fee, non-custodial futures exchange with its own base currency, DGTX. The platform is currently in early beta, with a full public release scheduled for April 30th. They just announced that last week, as well as the fact that there's over 1 million people who've signed up on their waitlist. What's more is that they also plan to include a mobile app for rapid-fire trading on the go and traditional futures markets, including Forex, metals, and commodities. They will also be adding stocks during the third quarter of this year, as well as additional cryptocurrency features according to demand. What I find interesting is that DGTX was developed on the Ethereum blockchain, and they'll be one of the first to implement Ethereum's scaling solution, Plasma, after their launch in the third quarter. Using that protocol, they will not hold users' funds, effectively making them a decentralized exchange. What drives demand for the DGTX token is that you have to use it in order to interact with their exchange. In effect, they aim to be the next Binance in terms of utility for the token. In a lot of ways, I find them to be one of the most compelling projects launching right now, and they're doing so at an optimal time. As it stands, futures is one of the best ways to potentially make money during a bear market. And to that end, Doc has recently put out a new class on futures trading, which will cover platforms like BitMEX and DGTX, and how to trade on them in a responsible and smart manner. So transitioning from that, the next area that I'm really looking at is privacy. Now, I've been a vocal critic of privacy-focused coins in the past. I've always felt that they were the antithesis of what governments' intentions are, and are the coins most likely to come under the crosshairs of governments worldwide. So what's the solution? How do I feel about this? Well, with strong arguments on both sides of the issue, I think it's a bit unclear what the best solution is. While regulators have well-founded concerns, I don't think that an all-out ban is appropriate, as the need for privacy is legitimate and not going away anytime soon. On the flip side, providing a wall for criminals to hide behind doesn't seem like an appropriate solution either. Therefore, as is the case with most innovative technologies, my guess is that the winning protocol will lie somewhere between radical transparency of public blockchains and the full anonymity provided by today's privacy chains. This hybrid solution will need to incorporate some functionality that allows it to be monitored for illegal activity. However, it will also need to provide sufficient privacy to end users, meaning that transaction histories and account balances must not be publicly accessible. Is that solution possible? I don't know, but I'm excited to continue to learn more about the issue, be part of the conversation, and see how everything unfolds. Recently, the Mimblewimble protocol has really taken the crypto space by storm, as it represents a step towards this privacy-focused future that we're talking about. Now, the obvious upside to the implementation of Mimblewimble is the healthy amount of privacy it offers by blending the hiding of transaction amounts and the hiding of identities of the transacting parties. Without visible addresses, it limits public snooping. Additionally, the use of multiple transactions in a single block cuts down the block size significantly, thus decreasing the processing time. On the downside, Mimblewimble needs to have a sender, receiver, and the transaction parties online to validate and sign off on the transaction. That's laborious any way you shake it. Adding to that, the unconfirmed transaction pool of the Mimblewimble transactions is still publicly visible, which could be used to build a skeleton transaction graph of the network, compromising the privacy. Overall, Mimblewimble is a compelling alternative to the offerings of Zcash and Monero, among many others. What makes it most interesting to me is that it can be added to the Bitcoin blockchain as a soft fork or a sidechain, the latter of which I think is more likely. Real-time testing on mainnets like Grin and Beam and possibly Litecoin would confirm the utility of the protocol and perhaps encourage developers to adopt these scaling and privacy mechanisms. Time will tell, but I think it's an interesting conversation to be had. Another small project that I find interesting in the privacy space is Phore. They've just recently expanded to 3 devs, they're community funded, there's no ICO or pre-mine, they've got masternodes, they're about to release 64 shards with tens of thousands of transaction capacity, and they're about to beat Ethereum to Casper. What's cool is that privacy will just be one shard. Masternodes can opt into what shards they support. I think it's hugely undervalued compared to similar projects, and their white paper is still one of my favorites in the space. The last project in the crypto space that's got my attention is not really a blockchain project at all. Radix is not a blockchain. It's also not a DAG, which is used by projects like IOTA. Instead, Radix is a trustless and decentralized platform that supports smart contracts. It's a speedy and scalable alternative to blockchains and DAGs. It is a public trustless decentralized ledger, but I think the easiest way to think about it is blockchain without blocks, a data structure called Tempo. It's based on a consensus protocol completely different from anything you've seen before, logical time. It aims to solve some of the biggest problems with blockchains currently, scalability and high risk of centralization. Instead, Radix focuses on linear scalability and true decentralization. There's no masternodes, there's no staking, there's no central council, there's no coordinator. It basically combines Nano, Ethereum, and Maker with a tokenization platform into a single cryptocurrency with no ICO or pre-mine. If they can pull it off, it's definitely one to watch for sure. I'd suggest you listen to the Daily Posthuman podcast to get a sense of where this project is coming from. Also read their economic paper. I think projects and technologies like Radix are important, not because it's trendy and cool to develop something that's anti-blockchain. Quite the opposite. Competition breeds innovation. When we imagine a more connected, decentralized world, it shouldn't matter to us what technology is chiefly making that happen. One of our biggest sins in the ICO boom and bust was letting tribalism and narrow-minded focus be our principal doctrines. So I think it's important that we work together and build a future that we can all be participatory in. Blockchain is an incredibly important technology, and I think it's the first step of many new technologies to come. Radix could be an interesting step in that direction, but time will certainly tell. So next I want to start talking about the STO landscape. I think this is another pillar of the digital economy that is growing and being built right now. Where I see the importance of security tokens is in the wake of the dramatic downfall of the ICO. We saw the need for a token, a fundraising model, which is compliant with regulatory norms, and thus this fueled the rise of security tokens. Security tokens are financial securities like stocks or bonds, but in the form of a digital token. And this implies that the tokens are subjected to regulatory norms and derive their value as a tradable external asset. While utility tokens grant investors access to the future services and product of the company, security tokens grant investors rights of ownership over the assets of that company. Security token holders are entitled to profit shares, dividends, buyback rights, and chiefly equity, which is not something we can see in the ICO model. The number of security token offerings, or STOs, popping up recently has been swiftly gaining momentum. This trend has been largely fueled by the regulatory authorities like the SEC imposing stringent regulations on token offerings. Many of the criticisms that I hear about STOs right now are limited in scope and nature because of the nascent state of the industry. But I think that will quickly change as more people realize the power of this fundraising model. In the simplest sense, the private equity market isn't really a market at all. It's still mostly an analog process that is done on paper and by fund managers, and there's no such thing as global liquidity for private equity. But that's about to change with the advent of the security token and the secondary markets that are going to arise around it. You'll be able to say, I have a dream, I want to build something and I need capital to do so, and be able to go out to the global liquidity pool to make that happen. And it's something that the ICO model definitely touched on, but was unfortunately flawed in its application. So as security tokens are inherently different from utility tokens, they require a completely different technical and regulatory approach. Doing this from the ground up is a perplexing process, especially for non-technical enterprises. So the more convenient option would be to choose a security token issuance platform, which can seamlessly provide technical and regulatory assistance. This is where we hear about projects like Securrency, Swarm, Smartlands, Own, Preflogic, and Polymath. But the one I've got my eye on is Harbour, which is an end-to-end security token issuance platform that aims to assist enterprises. Harbour leverages their regulatory token system, the R token, to enable transactions. But really, it's their focus on investor onboarding, compliance, and ensuring that compliance that really sets them apart. Furthermore, they've got a rockstar team, and their CEO, Joshua Stein, is a genius when it comes to security tokens. I think their compliance at the core model is really what's going to set them apart and help push the space forward. But we're still very much in the early stages of this horse race, so it'll be interesting to watch this play out. I think their most legitimate competitor right now is Securitize, which is owned and managed by what I consider to be the juggernaut in the STO space right now, SpiceVC. SpiceVC is a tokenized VC fund that currently has a portfolio of 11 projects, which it's either partial owners of or has complete authority over. As far as I'm concerned, Spice is the leading changemaker in the security token ecosystem. And they're going to be one of those projects you hear about in a couple of years that really define the industry. Lastly, there's Ravencoin, which is a Bitcoin fork looking to bring real-world assets onto the blockchain. The basic problem that they're trying to solve is that no current blockchain is specifically designed to transfer assets. The solution that they're trying to create is a Bitcoin-like system that is completely asset-aware, so that it recognizes which tokens have been designed as assets. It's trying to be as simple as Bitcoin is, and really singular in its purpose. Users will be able to issue, track, and transfer assets with each other with the ease of sending a message to one another. It will provide proper security levels for underlying assets, and assets can be protected from accidentally being destroyed. As the protocol and the system is aware of these assets, they can be carried on the blockchain like a passenger on a train, eventually getting them all safely to their destination. Now granted, there's been a lot of hype about Ravencoin, and most recently it's pumped a lot, but I think this project is pushing forward the narrative, and there's a lot of good morals and ethics behind it. I look forward to how they can continue to grow and expand the ecosystem in ways we haven't seen before. So let's move on to the last pillar of the overall digital economy and the projects that I think are really interesting to watch. That last pillar is DeFi, or decentralized finance. Decentralized finance is an ecosystem that will give us fully decentralized options for borrowing, lending, and trading. Already, we've replaced the functionality of retail banking with a series of online protocols for virtually no fees. Additionally, we started to build out derivatives around any asset or event, and to top it off, we have a number of USD-denominated stablecoins that allow us to risk off positions and put up collateral without ever needing to directly touch that dirty fiat. It's just a taste of what's to come. DeFi embodies the spirit of crypto, but what I'm quickly seeing is that it stands by itself and needs to be acknowledged as such. I think one of the most important DeFi projects is Maker, which launched at the tail end of 2017. It's created a system for minting a USD-denominated stablecoin, DAI, using collateralized debt positions, or CDPs. The system has performed incredibly well, with DAI effectively retaining its USD peg, and recently we saw the news that CDPs have sucked up 2% of all Ethereum during a year in which Ethereum declined as much as 94% from its all-time high. Some other interesting projects emerging in this nascent space are Dharma, which allows users to request or offer loans for any ERC20 fungible or ERC721 non-fungible assets. You also have dYdX, which enables derivatives and long or short margin trades, and Compound, which offers money market borrowing or lending for Ethereum, DAI, and a handful of other tokens. Decentralized exchange protocols, such as 0x, Kyber, and Binance Token, will be at the heart of DeFi, and are slowly coming online, as well as third-party exchanges and interfaces to access them, such as Radar Relay and Easwap. The DEX movement allows non-custodial trading to become a viable reality, though liquidity is somewhat lacking across the board. So, we're seeing services that use an on-chain DEX to provide a shared liquidity backbone for the industry, namely Bancor and Uniswap. Add into this a collection of niche applications, such as decentralized gambling services. Augur recently released V1 of their long-awaited prediction market protocol, and then projects like Veil and Guesser have been built on top of Augur to enable vastly improved user experiences. I'd also consider the project NASH for DeFi. It's a DEX which is a registered security and pays dividends for staking long-term. It's a new form of passive income. It's also got cross-chain trading too, which is pretty impressive. Overall, in the same way banking, investing, and equity markets are seen as separate entities under a larger finance umbrella, I imagine the new digital economy of crypto, STOs, and DeFi all working together harmoniously to push us towards a decentralized and more efficient future. There's something undeniably compelling about all of this, and I'd love to hear your thoughts in the comments below. Again, don't forget to check out our Omnia service, as these are topics we're covering every day. For example, we're building a portfolio that is based on these 3 pillars. So definitely come check out our new site, and if you haven't done so already, please subscribe to this channel and our free newsletter as well. Thanks again for watching. I'll see you in the next one. Cheers.